Hi, this is Stuart Cooper with your mortgage market update for July 28th, 2022. Now, today we've had a really good rally, not only on the 10-year Treasury, but also on mortgage-backed securities, where this might be a good opportunity to talk about locking in your interest rate if you're closing the next 30 to 45 days. And the reason why I would bring it up today is because we had this good little rally, and the rally was basically due to the GDP numbers that came out, gross domestic product. It was negative. It was negative 0.9, I believe. Yeah, negative 0.9. It was forecast to be 0.5. So missed expectations. That's the second time for the second quarter that we've been negative gross domestic product, which means that technically we're in a recession now, where it's being confirmed. That's basically the key definition on how most people look at recessions, and that's why the bonds are doing so well, is because when there's recessions, usually mortgage rates get better because of the need to lower rates to stimulate the markets. But we're kind of in an interesting time right now because the stock market was up quite a bit, and I definitely did not see that coming. I thought if these numbers were negative, that we would see kind of a sell-off on the stock market today. I don't know, maybe we will in a couple of days, but I was definitely thinking a sell-off today on the stock market. But the 10-year Treasury is definitely a nice little rally. You might want to take advantage of that and talk to your lender, broker, if there's an opportunity to lock in the rate if you're closing next 30 to 45 days. And the reason for that is because if we look at the economic calendar, tomorrow there's the core PCE inflation index that comes out. That's the personal consumption expenditures. That's a key trigger for inflation. So when that number gets reported, and it's expected to be 4.7. And if it's higher or lower, that could have a dramatic impact on interest rates, because we don't want to give anything back. That's why, like I always tell people, when it comes to locking in interest rates, if you're in a purchase market, you really don't want to float the market too much unless there's just so much negative news is coming out in the economy that rates are definitely coming down, because you don't want to get caught with rates going up on a purchase market. It takes too long for it to come back, if it does at all, and you might get priced out of being able to buy a home. So that's why you want to be wary of unlocks. And at worst case scenario, if you did lock your loan and rates dramatically improved over the next few weeks, most lenders, brokers have the ability to relock your interest rate. You might have to pay a fee for it, so sometimes you got to price it out. But don't think it's the end of the world of locking a rate if rates improve, because chances are you can renegotiate the rate. You might have to pay a fee, but just keep that in mind, all right? And with that said, I hope you like this information. I hope you like this channel. And if you can do me a huge favor, go ahead and subscribe, because my goal is to help you make informed decisions when it comes to real estate financing, investing. And I hope you have a great day.